Right now, on this Monday, October 27, 2025, the U.S. markets are closed. Looking at Lithium Americas Corp, ticker LAC, it finished the session on Friday, October 24th at $6.715 a share. That was a solid move up, gaining 3.63% on the day, with a little more buying coming in after hours, ticking up another few cents. The stock traded in a tight range on Friday, mostly between $6.55 and $7, on about 25 million shares of volume. Now that $6.71 price tag is precisely where the entire story gets complicated. The immediate gut-level reaction for most people looking at this name is, lithium is the future, this is a miner, I should buy it. But the critical reality that many investors are missing, the detail that changes the entire risk profile, is that Lithium Americas isn't actually mining or selling any lithium right now. This is not a producer. This is a pre-revenue, single-asset construction company. The stock's movement isn't tied to the price of lithium carbonate, it's tied to construction schedules, government loan guarantees, and execution risk. What you are buying today is not a mining operation. You are buying a dirt lot in Nevada, a massive pile of blueprints, and a $2.23 billion loan from the U.S. Department of Energy. Let's establish the common ground, the expectation that's driving so much of the retail volume we see on platforms like Robinhood and SoFi. The narrative is simple. The EV transition is happening. You see the demand for Tesla stock, and you know that cars need batteries. Batteries need lithium. Therefore, lithium stocks must go up. This thesis has attracted a massive amount of online investing interest, with people using the Robinhood app or the SoFi trading platform to get investment help and try self-investing in the next big thing. They see LAC. They hear Thacker Pass, which is the largest known lithium resource in the world, and they assume it's a straightforward play. They look at their Fidelity mobile app or their Schwab Intelligent portfolios and wonder why this isn't being treated like a blue chip. The expectation is that this is a ground floor opportunity on a future materials giant, something to tuck away in their Fidelity IRAs for 20 years. But the reality, the thing that sophisticated traders using interactive brokers are watching, is far more precarious. The reality is that Lithium Americas, as it exists today, is the result of a corporate split. It spun off its producing, cash-flowing assets in Argentina. That's a separate company now. This new LAC is a pure bet on one thing and one thing only: Thacker Pass. And Thacker Pass is not just a mine, it's a test. It's an attempt to extract lithium from clay at a commercial scale, something that has not been successfully done before. So the $6.71 price isn't a valuation of earnings, it's a valuation of potential, and that potential is balanced on a knife edge of risk. The company itself is burning cash as it builds, and it won't see a single dollar of revenue until late 2027 at the absolute earliest, assuming construction goes perfectly to plan. This tension is visible everywhere in the recent trading data. The most glaring signal is the short interest. According to the most recent data from Fintel, a staggering 13.44% of the entire float is sold short. This isn't just a small group of bears. This is a significant, well-funded position that is betting the company will fail to execute. On Friday alone, the off-exchange short volume ratio, the amount of shorting happening in dark pools, was over 37%. This is a war. On one side, you have the bulls, driven by the recent news that LAC just received its first major drawdown from the Department of Energy, a $435 million wire transfer that hit the bank account on October 20th. This news is huge. It means the government's $2.23 billion loan is real, it's funding construction, and it de-risks the immediate term financing. On the other side, you have the bears, who look at that same loan and see a company that is already projected to face cost overruns and delays. The bears are betting that building this complex chemical processing plant in the middle of Nevada will be much harder, much slower, and much more expensive than management is projecting. This is why the volume has been so high, averaging over 38 million shares a day. This isn't your stable Apple stock or Nvidia stock where you are analyzing iPhone sales or GPU demand. This is a binary bet. Many retail investors, perhaps doing their SoFi investing or looking at SoFi stocks, see the heavy volume and the rising price and think it's a momentum trade. But the high volume is also a function of this massive short position. There is a huge tug of war between the long-term believers and the short-term skeptics. The short-term picture is all about sentiment. News that the Trump administration is reportedly considering taking its own 5 to 10% equity stake in the company on top of the loan sends the stock flying. Why? Because it signals that Thacker Pass is now considered a U.S. national security asset. This isn't just a mine, it's a strategic move to break China's dominance over the battery supply chain. This geopolitical angle is what separates LAC from hundreds of other junior miners. When you add this all up, the daily swings are intense. The stock has a 52-week range between $2.31 and $10.52. That tells you everything you need to know about the volatility. This isn't the kind of stock you buy in your Fidelity brokerage account if you have a weak stomach. The analyst consensus reflects this tension perfectly. Of the analysts that cover the stock, 50% rated a hold, 25% have it as a strong buy, and 25% have it as a sell. That is a community of experts in complete disagreement. The bulls are looking at the 2027-2028 production target and the massive locked-in partnership with General Motors. GM, after all, is a 38% owner of the project and has a guaranteed offtake agreement for 100% of Phase 1 production. GM needs this lithium for its EV fleet. The bears, however, are looking at the technological risk of clay extraction and the macroeconomic picture. While the long-term forecast for lithium is strong, with a market deficit expected by 2026, the short term has been volatile, putting pressure on any company that needs to raise new capital. So, let's briefly go over the fundamentals, such as they are. Lithium Americas Corp is a development stage company. Its sole asset is a 62% controlling stake in the Thacker Pass project in Nevada. General Motors owns the other 38%. The project is fully permitted and construction is now underway, with over 300 workers on site pouring concrete foundations. The company's business model is to become a fully integrated producer, mining the lithium clay and refining it into battery-quality lithium carbonate right there on site. This is a critical distinction from other miners who just ship raw ore. If they succeed, their costs will be in the bottom half of the global cost curve. The company is pre-revenue and will be until Phase 1 production begins, which is targeted for late 2027. Its entire survival and valuation is based on its balance sheet and its ability to fund this construction. Right now, that funding is secured by the DOE loan and GM's capital, but any major delay or cost overruns could change that equation. This is where, as an investor, you have to decide what kind of investment this is. Is this a core holding for Fidelity Wealth Management? Absolutely not. This is a high-risk speculative holding. It's the kind of position you might take in an individual brokerage account, or even through Robinhood fractional shares if you want exposure to the upside but can't stomach a large position. It's a classic example of why online investing has become so popular. It gives you access to these high-stakes stories. But it's also where you need to be careful. A simple SoFi robo-advisor is not going to put this in your portfolio. This is an active investing choice, one that requires you to to follow the news daily. You're not just an investor, you're a project manager watching for construction updates. This is one of the more interesting SoFi ETFs or Fidelity ETFs that track rare earth metals or battery tech, but for an individual, it's a different beast. I want you to comment below. Do you believe Thacker Pass will meet its late 2027 production target, or do you think the bears are right and the delays are inevitable? Looking ahead, the future of LAC stock rests on a few key catalysts. The first and most important is construction execution. Every quarterly update showing that construction is on time and on budget will squeeze the shorts and build confidence. Every report of a delay will validate the bears and send the stock tumbling. The second catalyst is the macro picture. The lithium market itself is rebalancing. After a period of surplus, 2025 is expected to be much tighter. If lithium prices start to meaningfully climb again in 2026 and 2027, just as LAC is getting close to the finish line,